Good afternoon to our trader network, all of our traders that are in different countries who are trading their prop accounts. One of the things that we're going to show you here is the actual volatility. And this is the bottom here that when we had that 4-2, that was April 2, we had sold down and we had bounced and made that final low. Now, having said that, I'm going to draw a line. And remember what I'm saying here, this is the S&P. And yes, it is a trend that in the volatility that every time you bounced, including this bounce way back over here, and this was way back over here where that S&P popped. But what we need to know about this whole deal is I'm going to draw a horizontal trend line down here at the bottom on this 60-minute chart. And I'm going to draw it right. Bingo. See if I can get it there. There it is. Now, what we are going to show on this 60-minute, that we've had an extreme top. And we had put in that high over here on 4-2. The correction that took place was a correction from the all-time high right down here. And that the counter rally from that bottom to that top, we had another correction. But here's the deal. This part of the whole trend right here is that each pullback has been higher on this 60-minute. And so what we are looking at is how this part of the whole trend is going to come back below here, and it's going to take out these lows right across the board here. Okay, so I'm going to clear those headlines out of there, and what I'm going to do is I'm going to tell you right now that when we look at a daily, this 60-minute chart is a great tool because it's all going to be about this portion of it. And that on this topping pattern that we've had on 5-1, 5-2, of course, each time that we got up here, we put that high in here, but we cannot break the high. And we do have a 60-minute sell signal that is starting to take place on the S&P 500 index. Now, having said that, of course, it's very bullish within the volatility. However, this next leg reversal that we're going to go through is going to be much greater value, meaning that it's going to be a longer distance reversal, okay? So what we'll do is we'll start with number one. And we're going to start right here. This is that area. We're going to go right back over here. Here's the other area. And then, of course, we're going to go right here to this bottom. And where we had that trend and we've had pullbacks, that means that when we look at this 60-minute chart here on the S&P, that this reversal is going to be greater in value, and that the start of this 60-minute MACD sell signal would have a continuation pattern through tomorrow, okay? And that the bull have been fighting this all day long. One of the things that we can say is that we started buying up the 1890 puts right here. Now, listen, we wanted to go out with the higher time frame, as you can see, on a 621 1890 put. Now, we have other put options as well. However, this one is working very nicely, and that this one would continue, the 1890 would continue up to right around $58, where we would look at getting out. And on any volatility in the morning, like a gap up to resistance, we will take the opportunity to build more of that of this June 21 1890 put there on the S&P now. So basically what I'm going to show you is the following. Of course, we're going to do a lot more analysis on this because we're just showing you a daily. And what we're showing you is that these double tops and lower highs in here. See, this was a sell-off. We were short in January. Everybody knows that. StockMarketFunding.com. We called that ahead of time. Then you had your counter rally in the bull. However, right now, what we're going to be monitoring is what this daily bar is actually going to end up to be. So far, we're going to tell you that it's 14.9 handles right now on this. And we got a percent DS. And just remember that this is a public analysis. This is not a market maker analysis. And what we are going to show you once again is we're going to update this later, and we'll update it with the MMT platform. But one of the things that we want to make very clear here is that from these bottoms right here, particularly, we're just going to come off right here and we're going to say, look, this is where the outside of that reversal at the 10-day and all your other moving averages are going to come back down here. Now, naturally for the bull, so I'm going to show you for the bull. That's what it was about. And that's exactly what their trend was. But the longer one over here is a support level. But look at the amount of reversal level that we have here on that daily sell bar happening right now. And that once again, we've made it very clear over the weekend that there will be a 10% correction coming. And it's about time that that happens, because that would bring the money off of the sideline. Here is our market maker application that would tell you to get involved right away. And that every counter rally today was met with another round of sellers. And we have this 3-minute triple bottom. More importantly, though, from a daily perspective in the market maker platform, which is coded mathematically, it has no opinion. But here you are right now in our MMT platform. That is a huge, and you can see that volatility hook. You can see everything here. Here I'm going to go ahead. I'm going to go up here to the delta tree, and I'm going to click 30. Now it'll do all the lines for me. And what I am going to show everybody before we get there, on this daily movement, each one of these lines, which is 1/2 delta, equals $9.37. It is so accurate, it will scare you. Why will it scare you? Because you've never had nothing this accurate. That's number one. Number two is that as we take a look at that daily reversal in our MMT platform, and I just hit the diamonds, of course, and they're going to populate, like right here, watch. And these gauges, they're going to set it up like I'm coming off the runway, okay? Remember that the high-frequency algorithmic trading that these big firms have used cannot beat us. Why? Every one of these diamonds right here track that bot system, so each one of these HFT firms can never get around us. In fact, we've been programming stuff, and that these diamonds are those robots, and they are. And a lot of you people don't even understand what high-frequency trading is and how the big firms control it, buys and sells within milliseconds. Hell, we've been telling people that for the last 8 years. But you know what? It's always the case that the public is the last one to know, and they always get the con game that they do, that you are a victim to it. And you can always do the following. Each one of these lines are $9, and they don't lie. And it's that accurate. See, 9.37. Now that's a 1/2 delta. Okay? I'm going to blow it up right here, right now. And I'm going to blow up just this part of it. Now, each one of these lines, like I told you, they're $9.37 per 1/2 delta. But here was that big sell down. Look at that algorithmic. Look at that bot. That bot was at the high. He busted the half bar. He got down here. He took it up off of the low. And this is all in the daily format. But we could never break above on a closing level in this platform of ours of 1890. Now, I will tell people that on the flip side of the S&P, one delta down is 3.36. One full delta is 1865 on the S&P. And this does not lie. And you better learn one thing for you new people. Math doesn't lie. you listening to TV, you doing what you want it to do, and all of the chat and everything else out there is totally irrelevant. And you can get rid of all of that crap. Because, like I say, this platform is coded. You got an intraday range of 1550, your 1466 off of the, or 1454 off of the high, and off of the low, your 0.96. What is this? The current trend ratio? 0.83, 1.64 equals $15. And the trend ratio low was 1.76 minus 16.47, and that the selling is picking up a little bit. Now remember, I told you 1865 is a one delta move down, and that's one full delta. We're 3.4 points to getting to that one delta. Right now, we are below the half a delta, which is what? 1875. And we are currently made that low of 1868 in our platform. And remember, math does not lie. And we'll be doing a lot more work around the S&P. We're going to explain to you that as a market maker in the S&P, listen, you got to know how to you got to be a seller here, short, and you got to be a buyer on the back. And then when the diamonds stop going higher and they show you that you can't break above these diamonds right here on this platform, remember, it's mathematically coded. There is nothing else in the world like it. Okay? And you're welcome to join me as we do these things on an intraday level. So we're going to be looking at net, where we can add more to what? To the S&P 500. Right now, we have various different contracts. And so here, let me minimize this. First of all, I'm going to pull up the daily chart again. I'm going to get that out of the way. So, yes, we're up $3,215 on these options on the S&P. And we have other contracts too. And we'll talk more about those after the close. So, basically, what we have here is 123 points that were down over here. So I'm just going to show you that we have other contracts as well, okay? And one of the things that we're going to show you that volatility is your best friend. And not only that, we already told people when we did our Saturday and Sunday updates what it was going to be like before the fact, not after the fact. You see, the problem out here in these markets with people is they love it. Boy, it went up or it went down and they love it, but they're not even in the trade. Now, if that's not dysfunctional, you tell me what is. Ours is here before the fact. The analysis is done correctly. The market maker platform that you just seen does not lie. And so the S&P right now, if you want, now listen, we already sold some profits in this one. This here is a 1880 621 along with this one up here, and we have other ones too. And the thing about it is know when to be long and know when to be short. That is the key to success. And that key to success is you have to have something that is true, not deceptive. Price is price. The math is math. It calculates everything for you. If you want to find out more, simply feel free to go to stockmarketfunding.com. There, well, hey, you can sign up and you can spend some time with us for free. All you have to do is go right here. Okay. Here was the VIX and the VXN videos the other day. You'll take a look at those relative to our shorts on the NASDAQ 100 index options. Okay, you can get started here. And not only that, you can clearly see that on Baidu trade, we had to take some when they were up at the highs. 10 contracts were up $950. On the NASDAQ 100, $3,500 put for 621, that's $2,800 right there. Now, we are always adding more and more at different strike prices all the time so that you would know what you can expect out of a market maker. It's not easy. These index options are not, especially this NASDAQ 100. And we have other positions on the NASDAQ 100. As we speak, with about 50 minutes of the market left open live here right now with us, we're following through that 10-day simple moving average on that daily what? S&P 500. One of the things that we're going to show here is now that the markets has just closed on 5/6 of 2014, and as we made it very clear that the volatility back in December of 2013, that the volatility was going to be extremely high and that it would escalate more, and that 10% correction that we said on Saturday and Sunday during our updates on stockmarketfunding.com, this would be the beginning of it. And see, so this is a major support level, and it's all on a daily chart. And so you got a bunch of the moving averages on the daily that converge down here at 1865. Well, right now we're closing out 1867 right now. So we're just slightly above those moving averages, and we clearly have a bigger sell day than this volatility that got us from the little rally up here in the high, and we were diminishing. They came back in yesterday when we had that gap down in the morning. They came right in and they popped that baby up there. But once again, it looks like to me that we are on the right side of that trade, and we are. And look, at volatility is volatility. So stay tuned for the next round of that S&P 500 short. We conclude today at 1:03 p.m. PST time, 5/6 of 2014, and we hope to see you here so that you too can do that as well. And one of the things that we do have over here, let us not forget, we do have the put options here, the 1,890 puts. And we have other ones too below the marketplace that go out much further. But this is the one that we did the transaction today on. And yesterday, what we had to do was when they were trying to get that bull run going, we had to keep a quick stop on 5 of them. And then today, when it looked very promising to us that, hey, that move was over from yesterday, we went right back in and we accumulated our original volume and whatnot that we had. And we have other ones too. I mean, let us not forget that we have the 1880 puts. And yes, we had sold some for profits, but nonetheless, a good gain is a good gain. So this is a monthly expiration, 6/21 at 1890. And we have a lot more of them, don't get me wrong. But once again, volatility is volatility. So, like I've said before, the right thing to do is get short when you get a chance, when the markets are going to go in that direction. And one of the things that we did today also was that Netflix. We'll see you tomorrow.